is trying to gain ground after yesterday's decline by 1.2%. Worries over rising US oil inventories and uncertainty around the US-China trade talks weigh on the quotes. The signing of the interim trade deal may fail at any moment. The ruble buyers remain pessimistic as $1 costs 64 rubles today. Oil pulled back from the previous high and is now trading at $60 per barrel. The news that China is not ready to come to terms with the US on the most pressing issues has capped oil's growth. Chinese officials fear that impulsivity of the American president may lead to cancellation of the Phase 1 agreement in the coming weeks. The data on increase in US crude stockpiles has put more pressure on the Brent quotes. In August, the output indicator exceeded 12 million barrels per day, overtaking Russia and Saudi Arabia. Moreover, China released weak data on manufacturing PMI and activity in the service sector. The PMI drop to an 8-month low indicates a continuing slowdown in China's economic growth and affects market sentiment. Market participants expect that oil will stay under pressure till the end of the year. The growing concerns over the outlook for energy demand also affect the prices. In case OPEC and allies will not agree on more significant output cuts at the meeting in December, the oil is likely to lose support and extend losses. Negative sentiment among market players weigh on currencies of the emerging markets, including the ruble. Today, the dollar-ruble pair has broken above 64 mark. In the early session, the Russian currency advanced against the US dollar, reaching the level of 64.04. However, the overall trading activity on the ruble remains weak. The dollar-ruble pair is expected to hit the 64.50 mark with a possible shift to the level of 65. In general, the ruble remains overpriced with regard to global oil prices. Currently, there are no obvious factors that can boost the ruble's growth. Today, the release on the US jobs report may become an important event for the ruble. The weak statistics will indicate a slowdown in the American economy and will lead to a decreased risk appetite. On the other hand, strong data will support the US dollar, which is a negative scenario for the currencies of emerging markets. That's all for now. Thanks for watching and stay tuned.